Hello traders, welcome back to our channel. I'm continuing with the support and resistance based on Fibonacci, but today guys we're going to be looking at a breakout on your Fibonacci, which is to most people it's a loss, but if you know what you are doing, it might happen that it's a profit as long as you understand that Fibonacci retracement, it gives you support resistances, strong support resistances, which everyone is looking at. So it means that you have an edge, and is invisible edge as long as everyone is looking at what you are looking at. You are not alone. So let us look at if you didn't watch my other videos, guys, go and watch them, because here I'm continuing. So if you want the part one of Fibonacci, I will just name them like that. Go and subscribe and check my channel. You see there's support resistances based on Fibonacci, which is a great tool, especially if you want to look at support resistances for a smaller time frame, also a bigger time frame, based on what you would like to see, right? So I'm not limiting everyone. Be creative, guys. I'm just showing you how to use the tool, and some of the hidden things that many people they don't teach there, especially, in fact, as a beginner I didn't get the chance to be taught some of this stuff. I just figured it out myself. Oh, I saw. So as long as you keep on working hard, and you will start creating your own things. You'll start understanding the indicators differently and create your own support resistances, because remember, if you can watch all my other videos, I told you that indicators like moving averages, MACD, and they are lagging. You need support resistances so that you can confirm all of this stuff. So support resistances, it must be your friend, guys. Make sure that your chart has support resistances, and calculated support resistance is not just a support resistance like previous support and all those stuff. Use Fibonacci to generate your support resistance line. So in this case, guys, where the market is a buy, right? It's a buy. So I told you that if it's a buy, with the Fibonacci must be increasing, not decreasing. So it means that our lowest price is 100, our highest price is 0. This shows that the market is increasing. So because why do you put it like that? Is because the market, it was a buy, it started from low to high. So because it's a buy, that's we are moving with the daily candle, in other words, because it's a buy. So look at something here. This is something that many people they don't like when the market breaks the Fibonacci, because some they start doing their own stuff because it did break, right? And then you feel like it's the end of the year. It's not the end of the year, because you understand the risk management and you understand what happened. In fact, if you were using other tools in this strat, you will saw that it's a breakout. So I will add those things on other videos so that we'll see. So if it's going to break or it's going to bounce, right? So let us look at this, guys. I told you that the 78, the 61, the 50, they are strong on smaller time frame. On bigger time frame, 38 is a little bigger. It's a little strong for, yeah, it is also strong on bigger time frame, but smaller time frame, I think 61, 50, and 78, they are strong. So what happened here, guys? What happened? Let me take some little bit of the market did broke your Fibonacci, which means it was a loss for some other people, but for those who understand the strategy, it was not a loss, because even though it did came here, it respected the 61, but you have to wait, right? You have to wait for confirmation, and then after that the candle closed below, right? One other thing that many people make when trading support resistance is just that it is that many people they don't consider time when trading support resistance. You must consider time, guys. Since we are using daily chart, we must wait for the daily, for the 1 hour candle to close, right? That's why you see your respect. In most of my videos, that's what I say, especially when trading support resistances. Don't just trade, guys, without seeing the candle closes. Don't put your position without seeing the closing price of the candle. The closing price is important when trading support resistances, and there's no another thing which you can trade because except support resistances. You must trade support resistances because they give you the right price and the right time to enter position. So it did break, and I think this breakout it wouldn't have affected many people who understand the closing price, right? Because the closing price was not respected. It did close between 50 and 51, which means you must start waiting and see what's going to happen. And then it came back and closes, and breaks all the lines and goes down. What do you do? Many people, they will say it's a breakout, and then they start selling here, right? And then the market reverses back. Remember, your strong support resistances, they're at 78, 60, and 50, right? So you must put these lines to highlight your strong support resistances, right? I'm choosing this three, right? So what do you do, guys? You don't just sell anywhere or buy anywhere, right? Since it's a breakout, and a breakout, it means what? You were ready to sell, especially on this position. You were ready to sell. You were ready to look at a buy, to look for buying, right? And then the market did break, which means now your support, this support, it is now a resistance, and on a resistance you must look to sell, right? And then the market came back again, because this is your position to take action. You don't just sell because the market broke, guys. It must come back to your zone of entry. That's where discipline takes part, right? And then it did come back to the zone, which is 78, and then you would have put your stop loss maybe at 38, which is not a big one because it's a smaller time frame. And then this sell was profitable throughout this day and the next day, right? So I think this is simple, guys, for all the people who understand support resistances. And I picked this example because many people, they are used for the market to bounce right on their zone, and if they don't bounce, the market didn't bounce, it means the strategy is not working for many people. You must think like both sides. It's either it's a breakout, and if it's a breakout, you wait for a retest, right? If it's a bounce, you will see a bounce and then you take position on your bounce. So this is Fibonacci retracement based on time, guys. I don't want to make this video long. So until next time, guys, please don't forget to subscribe on the channel, and bye.